Welcome to our deep dive today. We're looking into Rain Industries Limited's Q3 2024 financial results. You've sent over some really great questions about their performance and these recent leadership changes. We have both the company's press release and their earnings presentation right here in front of us. So let's just kind of jump right in and uncover the most insightful takeaways that we can for you.
Yeah, it's definitely an interesting time for Rain Industries, for sure. We have this major leadership transition that's on the horizon. It's a kind of set of financial figures that paint kind of a mixed picture, a bit of a mixed story, and really a whole landscape of challenges and opportunities that are shaping their future.
Okay, let's start with that leadership change. The big news is that Jagan Mohan Reddy Nellore is taking over as managing director on December 10th, 2024. Succeeding his father, N. Radhakrishna Reddy. That's quite a legacy to follow. N. Radhakrishna Reddy has led the company for over 56 years.
Absolutely. But this transition appears to be very well planned. Jagan Mohan Reddy Nellore, he's not, New to Rain Industries, he's been actively involved, particularly in their global expansion and strategic acquisitions. And with N. Radhakrishna Reddy transitioning to that role of vice chairman and non-executive director, there's a clear sense of continuity there. And I think this move signals to investors that, Rain Industries is evolving while still retaining its core values and experience.
Let's look at the financial snapshot now. Revenue came in at $39.34 billion with an adjusted EBITDA of $2.92 billion. However, they reported an adjusted net loss of $1.6 billion. What do you make of these numbers? Well, it is a complex picture for sure. A stable revenue figure is really encouraging, especially in the current global economic climate. But that dip in profitability definitely raises some questions, I think, to get a clearer understanding. We need to examine how each of their segments performed. Remember, Rain Industries operates across three main segments: carbon, advanced materials, and cement. And each one of these segments tells a different part of the story.
So let's start with the carbon segment. Revenue is down, and they point to lower product prices and raw material availability as the main factors for that. They did see higher volumes from their Indian calcination business, which helped offset some of that impact. Yeah, that's the volume increase. Directly related to an order from the Commission for Air Quality Management in India, CAQM. This allowed Rain Industries to increase the import capacity of their domestic tariff area plant, or DTA plant. And it really highlights how, regulatory decisions can significantly impact a company's operations. However, even with the higher volumes, the carbon segment's EBITDA did decline due to that pressure from raw material costs.
So not all good news in the carbon segment. What about advanced materials?
This segment offers a little bit of a brighter spot. While revenue decreased just slightly, their EBITDA remained stable, and this was thanks to higher throughput from their high-heat calcined reactive alumina plant, also known as their HHCR plant. So this demonstrates Rain Industries' ability to kind of diversify and find those pockets of resilience, even when other areas are facing some headwinds.
That's good to hear. Finally, let's talk about the cement segment. This one didn't fare as well. Both lower prices and volumes contributed to a decline in performance. They specifically mentioned that the extended monsoon season was a factor impacting key markets.
Yeah, and those lower prices are likely tied to, increased infrastructure spending by the Indian government. And these large-scale projects can sometimes lead to a temporary dip in prices as supply increases. And this raises the question about, Rain Industries' ability to navigate these kind of external factors that are impacting their cement segment. Adapting to market trends is one thing, but anticipating and mitigating risks like extreme weather or policy changes is another.
It sounds like Rain Industries facing like a whole mix of challenges, from margin pressures in their carbon segment to global macroeconomic uncertainty, and even the ongoing impact of the Russia-Ukraine conflict. How are they addressing these?
Well, what's encouraging is that they are taking a proactive approach. Rather than just waiting it out. They're implementing strategic cost-saving measures, shifting toward a more favorable product mix. Essentially just, streamlining their operations to weather the storm.
And they're expecting those margin pressures to ease in the first half of 2025, driven by those initiatives and an anticipated market recovery. That's a good sign for investors.
It is. But before we get too optimistic, I think we need to take a closer look at the detailed financials in the auditor's reports. They give us a much deeper understanding of how these challenges are impacting their overall financial health.
Yeah.
So let's do that.
Yeah, let's dive into that.
All right.
So now we're diving into these detailed financials, and you're probably wondering what these numbers, like what do these numbers really reveal, beyond just like the top line figures that we discussed?
Yes, absolutely. That's really where the insights lie for you. We've got the auditor's reports here,
Yeah.
both for standalone and consolidated results, and they can be a bit dense, but they
Yeah.
hold the key to understanding, Rain Industries' overall financial health.
So what kind of stands out to you when you look at these reports?
What I find really fascinating is the level of detail we get here. We can really see how each segment contributes to the overall picture and what's really driving those profit or loss figures. For example, remember the challenges we talked about? In the carbon segment, well, the consolidated statement actually breaks down the revenue and EBITDA for each quarter, and it clearly shows the impact of those lower realizations and raw material costs on their bottom line.
And EBITDA, for those who might not be familiar, stands for earnings before interest, taxes, depreciation, and amortization.
Yeah.
It's really a key measure of a company's profitability from its core operations.
Exactly. And seeing that quarterly breakdown really helps us understand,
Yeah.
those trends and how those external factors we discussed are really playing out. Another interesting point that kind of jumps out from these reports is the impact of foreign exchange. They highlight a significant foreign exchange loss, primarily due to fluctuations in the euro.
That's a really great point. It just kind of underscores how these global economic forces can really ripple through a company's financials,
Yeah.
even if their core operations are doing well.
You got it. It's a reminder that, investing isn't just about understanding a company's products and markets, but it's also about considering those larger macroeconomic trends that can be really difficult to predict. And speaking of things that can impact a company's financial stability, let's talk about debt.
Yeah, Rain Industries does carry a substantial amount of debt, primarily in the form of USD and euro-denominated senior secured notes and term loans.
Right, which isn't unusual for a company of their size and global reach. The key here is to really understand,
Right.
how they're managing that debt. Unfortunately, the debt summary provided in their materials, it sheds light on this. It shows their cash flow, capital expenditure, and how they're using those funds, and also highlights their liquidity, which currently sits at a healthy $469 million US dollars, including a cash balance of $241 million.
Okay, that seems like a positive sign, suggesting they have the financial flexibility there to navigate those short-term challenges.
Absolutely. But it also raises questions about, their long-term debt strategy, particularly with rising interest rates globally. So how they manage this debt burden will really significantly impact their profitability in the coming years.
It's a balancing act for sure.
They need to invest in growth opportunities,
Yeah.
manage their debt, and adapt to all these external pressures, all while, trying to maintain a healthy financial position. It's a lot to juggle.
You said it, and that's why I think these detailed financial statements are so valuable for you. They provide the raw data needed to make those informed investment decisions. And it's not just based on, headlines or top-line figures,
Right.
but really on a deeper understanding of the company's financial workings.
So we've delved into these financials and gained a clearer picture of Rain Industries' kind of current state. But what does this all mean for their future? Are there more storm clouds ahead, or are they on track for a brighter outlook? That's the million-dollar question. To answer that, I think we need to shift our focus from, the past to the future. Let's dig into their outlook, assess their growth potential, and really see if Rain Industries is truly, storm-worthy investment for you.
We've covered a lot of ground in this deep dive into Rain Industries. We explored the leadership transition, dissected the financials. We even navigated those detailed auditors' reports. So now, let's look ahead. What is Rain Industries' future outlook? Is it all storm clouds? Or are there some rays of sunshine breaking through?
Well, their outlook statement definitely paints a pretty optimistic picture. They project that those margin pressures will ease in the first half of 2025, driven by their strategic initiatives and an expected market recovery. And let's not forget about those new import permissions and increased capacity in India thanks to that key AQM order we discussed. Plus, there's that anticipated boost in cement demand coming from government infrastructure investments.
Those are all positive signs. But they were still facing some pretty significant challenges. Like we've got global macroeconomic uncertainty, the ongoing impact of the Russia-Ukraine conflict, and then, of course, managing their debt. These aren't issues that are going to vanish overnight.
You're absolutely right. So, the question for you as an investor is, can Rain Industries execute their strategy effectively enough to capitalize on those opportunities and overcome those hurdles? Well, Their track record kind of suggests they're adaptable, They've weathered storms before, and they're taking these proactive steps to address the current challenges. So, you
Mm.
know,
Their cost-saving measures, their shift toward a more favorable product mix, and their focus on operational efficiency
yeah.
all kind of point to a company that's not just standing still.
And then there's the incoming managing director, Jagan Mohan Reddy Nallur. His experience in global expansion and strategic acquisitions could be a real game changer for them. Yeah, it's almost like he's inheriting a ship that's already sailing, but he has the skills and the vision to chart a new course, maybe even navigate them through uncharted waters. And this brings us to, I think, a key question surrounding this transition. Will Nellor maintain the company's core values while also bringing, these fresh perspectives and bold new strategies? It's a crucial point for you to consider.
So where does this leave you?
Mm.
As you evaluate Rain Industries, it's clear that they're facing a really complex mix of challenges and opportunities, and their future success hinges on their ability to execute their strategy effectively, adapt to external pressures, and capitalize on that potential for growth.
We've given you a lot to think about today, but perhaps the most important takeaway from this deep dive is this. Investing is an ongoing process of learning and discovery. Don't just rely on, headlines or surface-level analysis. You really need to dig deeper, explore the details, and challenge your assumptions.
We always encourage you to keep learning, keep questioning, and keep diving deep.
Remember, knowledge is power, especially in the world of investing.
So that's it for our deep dive into Rain Industries Q3 2024 results. We hope that this deep dive has provided you with some valuable insights and maybe even sparked your curiosity to kind of explore further, do you think? The Rain Industries, with this new leadership and their current trajectory, is positioned for a strong comeback.
Yeah.
That's something for you to ponder as you continue your research.
Food for thought. Happy investing.